All right, let's dive in. We're about to pull back the curtain on one of the most legendary figures in finance, Warren Buffett. We're going to try to unlock the surprisingly simple philosophy that made him a household name. Just look at that number. It kind of says it all, doesn't it? We are talking about a net worth that's bigger than the entire economy of many countries. It's an absolutely staggering figure that just begs the question, how on earth did he do it? I mean, was it just pure luck? Some kind of secret formula? Well, the answer is surprisingly straightforward, and it's a story that started a long, long time ago. You see, his journey didn't kick off on Wall Street in some fancy pinstripe suit. No, it started way earlier, back when he was just a kid with a real knack for numbers. This timeline really puts his whole career into perspective. This was not a get-rich-quick scheme. Buffett bought his very first stock at age 11. 11. That laid the foundation for an entire lifetime of disciplined investing. His success is really a testament to decades of patience. But here's the thing, he didn't figure it all out by himself. You know, every great student has a great teacher. And for Warren Buffett, that teacher was the legendary investor Benjamin Graham. Graham taught him this one incredibly powerful concept, value investing. It's simple, really. Forget the hype, forget what's trendy. The whole goal is to find a fantastic business and buy a piece of it for less than it's actually worth. It's kind of like finding a designer coat on the clearance rack. And this quote, it just captures that mindset perfectly. When other people are freaking out and selling everything, that's your moment to buy. And when everyone's totally euphoric, buying at any price, that's when it's time to be careful. And Buffett himself makes it totally clear where his ideas come from. He gives Graham the credit for the vast majority of his approach. So this isn't just some casual influence. It is the literal DNA of his entire strategy. So armed with all of Graham's wisdom, Buffett went on to develop his own philosophy, which, believe it or not, we can boil down to 3 core principles. This is really the heart of his method. Okay, here they are. First, know what you own. Second, make sure that company can defend itself. And third, be prepared to wait. Now, it sounds almost too simple, right? But the genius is in the discipline. Let's break each one down. All right, rule number 1, understand the business. Buffett only invests within a circle of competence. It's about having a really clear mental picture of how the company actually works. He's looking for strong leaders, he's actually reading the annual reports to find healthy profits, and he avoids any business with products that are just too complex to grasp. But, you know, finding a great business is only half the battle. This leads to his most famous concept. Once you find that great company, you have to ask yourself, what protects it? He calls this a competitive moat. Just think of the business as a castle. The moat is what protects that castle from invaders, you know, the competition. It's a lasting advantage that's super difficult for anyone else to overcome. And here are some classic examples to make it real. Coca-Cola's moat, it's that iconic brand. For Apple, it's that powerful ecosystem that just keeps you coming back. American Express has that trusted financial network. These moats are what protect their profits year after year after year. So this brings us to the third crucial rule. You have to think for the long term. On the left, you've got short-term trading, reacting to every bit of news, every price swing. But on the right, that's Buffett's way. He isn't renting stocks. He is buying a piece of a company to hold for years, sometimes even for decades. But all of this, understanding the business, finding its moat, holding on for the long haul, it's all built on one foundational mindset. It's powered by one simple but incredibly difficult human trait. This entire philosophy can really be boiled down into his 2 most famous rules. And the first one is just startlingly simple. Never lose money. And rule number 2? Well, never forget rule number 1. Now, this isn't just a clever saying, it's the ultimate guiding principle. It forces you to be disciplined, to avoid reckless speculation, and to prioritize protecting your capital above everything else. It's the result of applying those first 3 rules correctly. So what's the big takeaway here? First, invest. Don't speculate. You're buying part of a real business. Second, patience is everything. Time is your greatest ally in this game. Third, simplicity is key. You don't need some complex formula. And finally, it's about discipline over genius. Success comes from being the most disciplined person in the room. And that really leaves us with a final thought. The secret to Buffett's success isn't some complex algorithm locked away in a vault in Omaha. It's a philosophy built on principles that are available to all of us. The real question is, In a world that demands instant results, do we have the discipline to actually follow them?